Well, there's four essential questions that you absolutely need to ask. The first question is, what are interest rates based on? And there's only one answer for this, and the answer is that variable rate mortgages are based on the Bank of Canada and fixed interest rates are based on the bond market. Now, of course, that's important because if the professional that you're working with doesn't have an understanding or has their eye on the wrong thing, that's going to cost you thousands of dollars. The second question that I always encourage people to ask professionals is, if I take a fixed rate mortgage, I assume that I'm protected for the duration of the term. That's actually not the case, because when interest rates go back to more normal levels, there's a possibility that you can have payment shock. So just because you have a fixed rate or what you believe to be the best rate, that doesn't necessarily mean the best option. Thirdly, you need to clearly understand what's the mortgage strategy that you're recommending and why. And the key word included in this should be strategy, because anybody can quote an interest rate, but believe it or not, the lowest interest rate often doesn't mean that you are going to save the most amount of money over the term. And a great example of that is, look how interest rates have decreased since 2008. If your mortgage lender hasn't given you a strategy on how you can optimize the market to maximize your lifestyle and reduce your living expenses, that's not a great thing. So when you're asking your mortgage professional what personal commitment they have, which is the fourth and final question, you need to know what kind of proactive management system they're going to have for your mortgage, so you know how changes are going to affect you in real time. Because if you've had a mortgage that's not being reviewed on a consistent basis, it's costing you money. And even with the variable rate mortgage, if you don't have the right variable, you could actually be extending your amortization when rates do rise.